This has been a monumental reform, center and states coming together and agreeing to pool in their sovereign power of taxation for common good of the country was unprecedented. 17 taxes and 13 cesses became one tax. Multitude of rates instantly became 4. Almost all commodities saw rate reduction. Tens of returns were replaced by just one. Taxpayers' interface with tax departments got reduced. Border checks got reduced and eliminated in many cases. Goods started moving freely across states, which saved time and energy. A truck started doing two trips in the same time in which it was doing one. Thus, dream of one nation, one tax, one market was realized. The GST Council deserves all the credit for this. Sir, in the initial phase, GST witnessed certain teething problems. This was natural considering the scale of the reform. However, the Council, the Centre and the states proactively worked to resolve these issues. GST rates have also been reduced significantly, where relief of about 92,000 crores per year has been given. We should not lose sight of this fact when judging the performance of the GST. The details are given in the annexure. We are further simplifying the GST processes. A simplified single monthly return is being rolled out. Taxpayer having annual turnover of less than 5 crore shall file only quarterly returns. Free accounting software for return preparation has been made available to small businesses. A fully automated GST refund module shall be implemented. Multiple tax ledgers for a taxpayer shall be replaced by just one. It's also proposed to move an electronic invoice system wherein invoice details will be captured in a central system at the time of issuance. This will eventually be used to pre-fill a taxpayer's return. There will be no need for a separate e-way bill. Its rollout would begin from January 2020. Electronic invoice system will significantly reduce the compliance burden. Sir, on the customs side, my proposals are driven with the objective of securing our borders, achieving higher domestic value addition through Make in India, reducing import dependence, protection to MSME, and promoting clean energy, curbing non-essential imports, and correcting inversions. Defense has an immediate requirement of modernization and upgradation. This is a national priority. For this purpose, import of defense equipment that are not being manufactured in India are being exempted from the basic customs duty. Make in India is a cherished goal. In order to provide domestic industry a level playing field, basic customs duty is being increased on items such as cashew kernels, PVC, vinyl flooring, tiles, metal fittings, mountings for furniture, auto parts, certain kinds of synthetic rubber, marble slabs, optical fiber cable, CCTV camera, IP camera, digital and network video recorders, and so on. Also, exemptions from customs duty on certain electronic items which are now being manufactured in India are being withdrawn. Further, end-use based exemptions on palm stearin, fatty oils, and exemptions to various kinds of papers are also being withdrawn. To encourage domestic publishing and printing industry, 5% customs duty is being imposed on imported books. To further promote domestic manufacturing, customs duty reductions are being proposed on certain raw materials and capital goods. These include certain inputs of CRGO sheets, amorphous alloy ribbon, ethylene dichloride, propylene oxide, cobalt matte, naphtha, wool fibers, inputs for manufacture of artificial kidney and disposable sterilized dialyzer, and fuels for nuclear power plants. To further incentivize e-mobility, customs duty is being exempted on certain parts of electric vehicles. Customs duty is also being exempted on capital goods required for manufacture of specified electronic goods. So the export duty is being rationalized on raw and finished leather to provide relief to this sector. Crude prices have softened from their highs. This gives me room to review excise duty and cess on petrol and diesel. I propose to increase special additional excise duty and road and infrastructure cess, each one by 1 rupee a litre on petrol and diesel. It is also proposed to increase custom duty on gold and other precious metals from 10% to 12.5%. It is also proposed to increase custom duty on gold and other precious metals from 10 to 12.5%.